Hello and welcome to the day ahead. It is Thursday, May 5th. I'm Andrew Gagan. Well, getting straight to it, as expected, we have liftoff.
The labor market is extremely tight and inflation is much too high. Against this backdrop, today the FOMC raised its policy interest rate by a half percentage point and anticipates that ongoing increases in the target rate for the federal funds rate will be appropriate.
For the first time in 22 years, the US Federal Reserve pushing interest rates higher by a full half a percentage point, signalling more to come as the central bank battles to bring down inflation from 40-year highs. The market is pricing in another half-point hike at the next meeting mid-June and possibly another one in late July, while there was some speculation that the Fed could hike as much as 75 basis points in upcoming meetings, should it be warranted. However, Chair Powell was quick to pour cold water on that, with saying that any big move in the future is unlikely.
75 basis point increase is not something the committee is actively considering. What we are doing is we raised 50 basis points today, and we've said that, again, assuming that economic and financial conditions evolve in ways that are consistent with our expectations, there's a broad sense on the committee that additional 50 basis point increases should be on the table for the next couple of meetings. So we're going to make those decisions at the meetings, of course, and we'll be paying close attention to the incoming data.
For market participants, it's all about the path of quantitative tightening, with June 1st plucked as the date the Fed will put its bond purchase stimulus program in reverse, starting a clip of $47.5 billion US, further tightening financial conditions by adding upward pressure on long-term yields and mortgage rates.
These are very uncertain. I really can't be any clearer. There won't be any clearer. You know, people estimate that that broadly on the path we're on, and this will be taken probably too seriously, but sort of 1/4%, one rate increase over the course of a year at this pace. But I would just say with very wide uncertainty bands, very wide.
Elsewhere, the Fed noted while consumer spending and business investment has remained strong, policymakers warned the war in Ukraine, coupled with COVID lockdowns in China, are likely to worsen those supply chains.
The surge in prices of crude oil and other commodities that resulted from Russia's invasion of Ukraine is creating additional upward pressure on inflation. And COVID-related lockdowns in China are likely to further exacerbate supply chain disruptions as well.
For investors and the market, the worry is all around the Fed's ability to slow growth without triggering a recession. The last time the Fed raised rates by half a percentage point was in May 2000, near the height of the so-called dot-com stock bubble, which burst that year and led to a short recession in 2001. Well, taking a look at the market reaction, Wall Street ending sharply higher, with the S&P recording its biggest one-day percentage gain in nearly a year, the Dow having its best session since November 2020, and the greenback slumping to a one-week low after the central bank chair pushed back against deploying 75 basis point hike. All 11 of the major S&P sectors rose, with energy leading the gains. Bank stocks climbed as yields soared, with the benchmark 10-year topping 3% for the third consecutive day. The move higher a welcome relief to richly valued growth stock investors, which have borne the brunt of a recent sell-off on concerns about a hit to economic growth due to a hawkish Fed. Well, elsewhere on the data docket overnight, ADP private payroll jobs rose by 247,000 in April in the US, considerably less than the close to 400,000 expected. We'll get a more accurate read of the jobs market on Friday with the non-farm payrolls number. Forecasts are for around 400,000 jobs to be added to the economy, but the unemployment rate is expected to hold steady at 3.6%. Meantime, a moderation in hawkishness from the Fed has seen the crypto complex light up as it continues to track equity markets. Bitcoin up around 5.5%, once again closing in on the $40,000 mark. Ethereum up close to 6%, in striking distance of $3,000, while some of the altcoins have seen the most impressive gains. Cardano and Avalanche up more than 14%. To the impact on the local session, the rally on Wall Street is likely to lift the Australian share market. ASX futures currently up just over 0.4%. Commodities remain in focus. after a proposal by European Commission President Ursula von der Leyen for a phased embargo of Russian oil imports, which pushed the price of Brent crude up more than 5% to $110 US a barrel. Iron ore futures having fallen slightly, base metal prices largely mixed, and spot gold up 0.75% to $1,881 an ounce. For the local currency, the Aussie dollar continues to march higher, surging nearly 2.5% from 71 cents to 72.65 US cents. It's currently come back. Well, that does it for the day ahead. See you again tomorrow.